With that, let's bring in Scott Bauer. Thanks, Pat Mullally. You the man. Joining us from Salt Lake. Scott, sounds like you're in the camp of this analyst that maybe the bullish hopes are being dashed by the for this company right now.
Yeah, I sure am, Oliver. I think long run, this is a company that has possibility to retrace some of these losses that we've seen over the last 6 months. But I think they're fighting a pretty hard uphill battle for the earnings print here. Yes, metrics are probably going to increase, which is a good thing, but their expenses have also increased. And I think that when they come out on their conference call and they note that, that's going to really, investors are going to take a hard look at that. And that's not something that's going away, right? That's not going to be a one-off here for the quarter. Their hard goods, their expenses going into their bottom line is going to keep increasing. So I am very bearish on the company short term, and I'm taking that into the print here. I'm looking at buying an April expiration 75-65 put spread. Pretty aggressive put spread for me, actually, to go that wide, and also really looking at the money and not slightly out of the money. So I want to buy that for about $3. Definitely a downside move I'm looking at. Pat mentioned there's some support at 70. I see the real big support down around that 66 to 65 area, which is my target on this put spread.
Okay, buying the 75, selling the 65. We're at 76.2 right now, so just slightly above it, and break even around 72-ish, 73.
It's exactly right, but I've given myself some time here as well. So we're going 4 to 5 weeks out on this, so it's not an imminent position that expires tomorrow or even next week. But it is something that I will very unlikely hold all the way to expiration. I will either look to adjust it, maybe exit it right away, but unless they come out with just something spectacular about guidance, I just don't see how the stock goes up.
Okay. All right. So the onus is on the company now to prove to the market that it's got an ace up its sleeve. I think I'm generally on your side there, Scott, where based on what we've seen already, that this company is kind of getting looped in now to the broad selling. After all, I agree. Last year was so big, right? If Oracle hadn't gone anywhere last year, maybe it wouldn't get wrapped up in this valuation compression we've been in, but it was explosive, even more so than some of the other cloud companies last year.
It really was, because you look at a stock like Oracle that typically trades on very low volatility, doesn't have big intraday moves, doesn't have huge moves typically on earnings, and then it did get caught up with the rest of the sector, and I think it's paying the price for it right now.
All right. Nice trades. Getting bearish. Oracle looking for pretty substantial move to the downside here on earnings. Pretty short term. Scott, thanks a lot, sir.
Thank you.
You got it. Mr. Bauer is the CEO of Prosper Trading Academy.